All right, everybody, what's going on? My name is Bryce Tuohey, and this is the Tuohey Talk Show. I have a really special guest live in the office with me today. I'm really excited about this episode. I'll let him introduce himself. He's a really good friend of mine. His name is Ron, and I'm actually going to switch the camera over to him, and he can give you a quick introduction about who he is, kind of how we met, and kind of just like your style of trading. Then we'll get a little bit more into it. This is going to be a really fun episode for a lot of you guys watching. I'm really confident in that. So, Ron, take it away, man.
Thanks, Bryce, for having me on the show. So, like Bryce said, we actually met through a mutual friend of ours. Shout out Connor and John as well for introducing us. So I think we met actually in the gym. He was at the local Lifetime gym here in Austin, and I was like, damn, this guy looks really familiar. He's like some guy from FinTwit. I was like, maybe this is like the guy that Connor and John are friends with. You guys just came back from a trip to Aruba or something. I was like, he looks like the guy in the photos, but never said anything. He ended up, I think, leaving the gym, and I was like, texted Connor, and I was like, hey, does Bryce live in Austin? And he was like, yeah. So anyway, funny little story about how we met. Ended up seeing him later that week, and have known this guy since. So a little bit about me is I would call myself a full-time trader, but I still have a full-time job, so take that for what you will. Day trade every day, all during the day, so whatever. Mostly stick to large caps. I'm primarily an options trader, options day trader. Definitely trying to get into swing trading more. I wouldn't say I'm a swing trader just because I'm way better at day trading right now, but swing trading is definitely something that is my primary focus on improving at the moment in terms of my immediate goals, I would say. But mostly just large caps and day trades.
Sweet, yeah, and no, so that was why I'm actually really excited to have Ron on for this episode, is because I know that Ron is a really great trader and he works full time, and he's kind of living proof that it can be done. And I know that's something I'd argue most traders when they're first getting started, right? You have to pay the bills. Like, you're not just going to go right full time into trading, but it is a transition as you kind of are learning to trade and trying to find out that work-life balance, then with a work-trade-life balance. And I'm sure you've had your fair share of difficulties with it, but that's something I'd love to talk about in the future, or in this episode a little bit later. But I'd like to get started. So as Ron mentioned, he's actually more focused on large cap stocks, options trading, and that's very, very different from what I trade. I'm primarily small cap, almost exclusively a small cap trader, and it's something I've definitely looked to try to get into. But it's a whole different ballgame, as Ron, I'm sure you know. And I'd love to kind of hear your experience, where you learned from, where you got, like, when you got started trading, and just a little bit about your journey as a trader as you've kind of, developed. And we'll get into some charts on the overall market, because I'd love to hear Ron's thoughts on this crazy market bounce we're having right now. Down from 410, we broke 460 just the other day, right? So I'd love to hear Ron's thoughts on all that. But Ron, let's get started with the beginning of your journey and kind of how you got to where you are now. Maybe from when you got started trading and when you really, I know you got started early, but then you really started taking it seriously at a different time. So I'll let you get started, get right down into that.
Yeah, so I had a couple stints in the market. First in the OTC, and then I was doing some earnings plays, just kind of like essentially gambling. I look back on it. Didn't know that at the time, but got caught in one earnings play that was really bad. And some company announced an accounting error during their earnings call, and I was like, oh, well, bagged. So,
Yep.
But yeah, so I mean, you live and learn. And then it kind of got into like paying attention to CNBC, and then obviously that only worked for so long.
Yeah.
But then I kind of took it to the next level, I would say, January of 2020, before COVID and anything happened.
I was going to say right before COVID.
Yeah.
Right? Yeah.
So COVID was actually happening in China. And this was like the end of the CNBC phase for me. Jim Cramer was on Mad Money, and he was like, oh, well, I think the Chinese market is going to go down. So I essentially shorted the Chinese market. I bought the minus 3x Yang Chinese ETF that tracks their index.
Okay.
Full port into that minus 3x ETF, and did pretty well. The market pulled back, and then anyway, fast forward 3 months later, and it comes to America, right? It's like around the March time frame, and my friend, shout out Joe, introduced me to options trading. And I did the same thing, but with options. I went in all-in SPY weekly puts.
Talk about being leveraged, right?
Yeah.
talk about going from one extreme to the next.
Yeah, so I just bought a house at the time, and my only account that I had was my Roth IRA, which, funny enough, is like not the account that you want to be like learning how to day trade in. So I started off with $10,000. I ended up taking that account to $160,000 within, I think, less than 2 months. Just riding SPY puts, just doubling down on my portfolio on those weeklies, out of the money puts. So that was like my first experience in kind of harnessing the power of like, oh shit, like this is like the potential of like the power of like learning how to trade. Obviously, zero risk management, zero trading strategy, trading off of, what I thought was going to happen, which is completely opposite to what I do now. So now, like fast forwarding to what I do now is all technical chart based. I don't use any indicators. Really, I use just volume and price. I do have the 50, moving average and the 200 moving average on my charts. I post all my charts to Twitter, so you can check those out. But it's mostly just simple price action and just developing patterns that I'm familiar with, and then developing a thesis from that.
Yeah, and guys, by the way, if you want to learn more about Ron, there will be all of his links to his socials and everything down in the description after this video is posted. Because you share you share a lot of chart ideas on Twitter, I know.
Yeah, I go through waves of sharing a lot of ideas, but I try to stick to the ideas that have the most conviction behind, because I think once you dilute your feed with, just anything and everything, then it kind of loses meaning. So, I mean, I will occasionally just be like, oh, day trade, like yesterday, for example, great example. I posted GameStop. I think I posted 161.75. I took shares of GameStop. I was like, it looks like it's bottoming out for a bounce, and ended up ripping to like 200 and after hours after they announced that they were splitting the stock. So that was a that was a pretty crazy opportunity there. Yeah, that was like a trade idea I posted live. But mostly it's like my essential strategy is you're deriving levels and patterns from the daily chart, and then using those for day trades. I do swing trade as well, like I mentioned, but it's I mostly take those big breakout pivot levels, like the inflection levels, and then take that just for day trades. So for me, like the conviction is there to hold overnight, but I'm still like smaller size overnight, so I'm not quite, hitting the homers off of like the overnight swings. But yeah, that's essentially the strategy, hitting those inflection levels. And
right, and so a question that, I kind of was talking to you a little bit about before, but you're trading, options and common stock, right? Like
yeah.
what, again, I know we talked about this before, but what's the difference for you? Like, when are you deciding, okay, I'm going to take an options position on this, or I'm going to trade the common stock? What's that, I don't know, what does it take for you to take one over another?
Yeah, I would say primarily I'm an options trader, because the ideas that I take are more so bigger picture ideas that I day trade. So, for example, I will take an options trade that is, I'm eyeing a breakout over a certain level and it's like trending up towards that inflection level, on ramping volume or something like that, right? So you're kind of curling up towards that level. So I'm like adding every dip, raising my stop along the way, big picture in mind, and then those are options trades, where I'm scaling in slowly and then hitting that breakout, right?
Right, okay.
Versus common shares is like your income producing trades, I would say. So like you're hitting like a support level and it's like coming down and you want to just scalp it for $1, right, on that bounce. So I'll use common shares for that. Kind of going into what we were talking about trading full time and also, working full time.
Yeah.
If you're scalping with options, that becomes increasingly difficult because you have to look at. I trade exclusively off my phone. So fun fact.
Really? I actually didn't know that.
Yeah. So just a quick aside here. So all the money is made when the market's closed. My mentor Matt Flex Trades on Twitter. He says that, and it's the truest thing that you could possibly hear in trading. All the money's made when the market's closed. So all the preparation, all the stuff that I do is like, when the market's closed, when everything's, there's no motion in it, you see everything with black and white, there's no lens that you're looking at it, if you have any positions or whatever. But anyway, so I set all my levels. I use TradingView for my charts.
Okay.
So I set all my alerts on TradingView, which is nice because they have like, the iPhone app, and
Right.
I have an Apple Watch. And so if I'm in a meeting, I'll get like a buzz on my watch, and I'll look and I'll be like, oh, gotta, take care of this, or maybe it's just something else, right?
Right.
So that helps a lot. It helps scaling into positions when alerts go off. It's like when it gets to this level, it's like, okay, I should be paying attention. Or if it's like my stop loss, then you set an alert for that too, right? So it goes both ways. But yeah, definitely do the work while the market's closed. If you have a full-time job, I would say that's crucial. If you can spend more time during the day looking at charts, then obviously that changes. But definitely, you make all the money when the market's closed.
No, I don't think any truer words could be spoken. I think a lot of people compare it to any like a sport, right? I played basketball in college, and I can promise you that anything that was produced on court, any points you were scoring, any blocks you were getting, whatever the case may be, that didn't come from just playing a bunch of games. It came because you were practicing every day, right? I mean, if you look at like especially I'd say a swing trader, but even day traders, right? That work comes from a lot of reviewing of charts, a lot of reviewing of patterns, seeing how different theses react to different catalysts, and really putting in that work after hours. And I think that's something that, especially when you're learning to trade with a full-time job, you don't need to one, be in a trade all day, right? You don't need to be actively checking your phone, especially if it's a bigger picture plan, which I'm sure that's a big part of why you were able to more or less learn to trade at the same time, because you, like you said, a lot of your trades are based on big picture charts, right?
Yeah.
Like you're looking at the big picture.
So let's get into that. So kind of segueing from the original, putting the entire port and the SPY out of the money puts, and then so I didn't get to finish that story. So let me finish that one.
Keep it going.
So went from 10K to 160K, and then I stayed short in April, when the market was ripping.
Now,
because I was like,
you were working at this time.
I was
right?
working,
Yep,
yeah.
okay.
And I was like, well, COVID cases are hitting all-time highs. Why would I, not be short the market? So ended up going from 10K to 160K. The market ripped obviously in April. Took that back down to 20K. So 100% gain off 10K. I was like, all right, fuck, well, I screwed that up.
Was that one trade? Or was that
was a series of trades, and then so I was like I said, I understood the power of options at that point, and I was like, all right, time to take this seriously. Develop a formula, develop a strategy, develop like some technical analysis. So what I started doing at that point was looking at all these Twitter guys and kind of backtesting all of their charts that they were posting. So looking at all their charts, like understanding like why they were posting them, studying. This is all like while the market's closed, while the market's open as well. Like just as they were posting in real time, kind of like snapshot that image of the chart and like what it looked like, and then kind of understanding like what was going on. What were they looking at? Was it volume? Was it like the 50-day? Was it the RSI? Whatever. I looked at probably every indicator out there, and I was like, all right, whatever. I came down to my strategy, which is just price action basically. And then back tested all those strategies and then arrived at what I do today. So that process took a while, I want to say it took me a year to be consistent.
Yeah.
From that point. But I was also watching every single tick every single day of every like minute that the market was open. So what I would do is I would come into work. I would wake up at like 3 a.m, come into work early, do all my work for my day job. And then, I'd obviously have meetings here and there, but I was doing all that work, and I was in person. I wasn't, working remote like a lot of people. Unfortunately, I didn't have that option.
Yeah.
But yeah, so I was watching every tick, and that is truly how you learn as a beginner. You're like understanding. I would say you have to take trades to understand,
Yep.
How things work. But first of all, watching every tick, and then you got to take trades, because once you take trades, you kind of understand what it means to have skin in the game, and then you get that emotional reaction, right, when you're in the trade. So it kind of teaches you, size and like motions with size, and then how to like manage that as you're trading.
Now, this is a question after what you just said, the first thing that I think of, and it's because this is something I talk about personally a lot, you're talking, you need to have that skin in the game. You know, you learn there's no way around it. I hate to be the bearer of bad news, but like we all know, there's no way
it's
to.
The dues.
There's no
pay
way
your
to
dues.
There's no way to avoid screen time. You have to put in the screen time, but at some point you can only put in so much screen time without actually putting the skin in the game. I'd love to hear your thoughts about paper trading versus trading with real money.
Great question.
I think a lot of people probably know my opinion on it. I nothing wrong with paper trading. I believe in starting with small size, so it's actual money, actual skin in the game. But everyone has a different opinion. I'd love to hear yours.
Absolutely. Paper trading is probably an invaluable resource for only so long.
Right.
You're starting out and you're back testing strategies that are posted by these Twitter gurus or whatever.
Yeah.
And maybe you learn something from Twitter and then you want to put it to use, test that out for a little bit. But like I said, you don't really learn anything in terms of what trading's really all about. Like, understanding the technical aspect of trading is probably the easiest thing about trading.
Agreed.
Understanding the charts is super easy. Like, obviously, once you get to that point, right?
Yeah.
But then to take your trading to the next level, you really got to have skin in the game, because the hard part of trading is that emotion. Like, we see the same thing on the same chart and we do different things, right?
Yeah.
So the way everyone trades is different. You got to figure out, what your strengths are. So that comes in when you put skin in the game. So what I would say is, do that and start gradually, right? You paper trade for maybe a month, 3 months, figure out some technicals, and then you start off with maybe a $5,000-$10,000 account, whatever that money is, that money amount, it's different for everybody. But don't trade with more than what you're willing to lose. I traded with more than what I'm willing to lose, actually. I went into debt trading when I started out. Yeah.
Oh,
Fun
okay.
fact.
Can we hear a little bit about this story?
Yeah, I mean, so I was, don't do this. I guess I was accustomed to a certain amount of lifestyle in my life. I have an engineering project management job, so I make decent money. But then I was losing all that money in the market. I would get a paycheck and then, $5,000, lose it, $10,000, lose it, whatever, build my account up almost to PDT, lose it. I'm like, shit. But, and this is like, not my IRA account. This is my regular trading account now.
Right.
So, it was a battle, and then eventually I was like, oh shit, like I can't pay my bills. And then it kind of like mounted up and I'm like, well, honestly, it only pushed me to work harder, because I'm like, it's like, not really sink or swim. Obviously there's things that could have worked out for me. I could have just stopped trading, obviously. Right. But like, I didn't want to do that. I was like, I had so much passion for this, and I saw the potential of trading, from my experience with options starting out.
Yeah.
Obviously that was a crazy freak event, but like, once you understand how to time the market, that power is super powerful, right?
Without a doubt.
Yeah. So went into debt. Like multi-5-figure debt, and and then obviously I became consistently profitable, and actually that debt was erased like within a month or two. Yeah.
Congratulations.
Yeah. That, I mean, I can't tell you how good that felt. That was like, financially, like the first step of like, I don't want to say financial freedom, but like, it's like you don't have that debt, and like you look back and you're like, oh, all my hard work is finally paying off, and I'm like seeing it in my chart, my P&L. So.
I'm sorry, not to cut you off here,
Yeah.
but something I really actually want to go back to is, you were saying, and this is crazy to me, you were going into work at 3 a.m. to get your work done.
Yeah.
I mean, now that's obviously an extreme, and it's a great extreme because it paid off, I'm sure, on millions of folds. But is that the kind of mindset you have to have when you're working at full? Is there a way around it? Is there how could you have seen yourself doing it another way and being where you're at today?
Yeah, so I mean, a lot of people that start trading, I would say, are looking just to make money, which is the wrong mindset.
Right.
The mindset is you have to learn how to trade, and to learn how to trade, like I said, you got to watch ticks, you got to have skin in the game, you got to just pay your dues, whether that's in the form of time or money, or most likely both, right?
Yeah.
So for me, coming into work early meant that I would be able to focus more time on doing that, right? So putting my skin in the game, putting my time into just focusing on trading. So I attribute, my success, which I think is, that I accomplished pretty quickly in terms of like learning how to trade. Due to that, I was just grinding it out, every single day, looking at charts, looking at, like, after the market closed, I was still looking at charts, like back testing strategies. I was journaling trades, why did this work? Why didn't this work? I was figuring out my strengths and weaknesses. And then after that, I, started developing consistent strategies and patterns that were working out more probabilistically than other things. And then cutting out, the weaker strategies, right? So figuring out what's strong, what's working for you, and then cutting out the rest. A lot of people will say, like, work on your weaknesses, but I completely disagree with that. You got to find your strengths, hone in on those, and then just like develop your niche and just nail that.
I actually I just gave a webinar on Wednesday, and it was almost the exact same topic. Is it's so easy, and it's probably debatably easier when you're first getting started. You said it best. I mean, you get to a point where we're trading the same, more or less, we're looking at the same stuff. We see the same exact patterns developing, but we trade them differently. We're going to be trading different strategies. We're going to be trading different, even market caps, right? And so it's so easy to get blinded and crowded with all the noise of different strategies, different setups. And yeah, like I said, as a beginner, it is a little bit tough, in my opinion. But once you really find what almost speaks to you, what fits your personality, which I think is a big part of learning to become consistent, you have to get rid of the rest of the noise. You have to do everything you can to not necessarily work on the weaknesses, but really refine the strengths. And you're going to have weaknesses within your own strategy that you probably want to cut out a little bit. If you're lacking risk management, if you're if you're chasing stocks, that, well, it's my pattern, but all of a sudden you bought it $1 a share higher, now your risk is all sorts of skewed. Like, you can refine that stuff, but it really, really comes down to refining what you're doing well, and I couldn't agree more with that. Do you have any examples of, like, when you were, kind of going through that same battle, trying to find what worked, and did you ever go through a spot where you were trying to fix your weaknesses instead of work on your strengths?
So in the beginning, I was taking anything and everything that was coming along. I saw a trade thesis. I was like, oh, intraday flag on the 1 minute, on the 5 minute, on 10 minute, or maybe it's a curling off the bottom, or like bounce off support, or a scalp, whatever. I was taking every single trade, probably with like the same size. I was like, oh, $1,000, is my trade every time. Most beginners make the mistake of sizing every single trade the same amount, which is so damaging. You don't. We'll get into that, but so I would say you got to try all the trades, see what works out for you, and then kind of like reduce that list, filter it down. A lot of this comes from journaling, and a lot of it comes from doing like statistical analysis in the form of, like, maybe it's just Excel, maybe you use one of the trading tools that are available to you, like TraderView or TraderSync, whatever it may be, or whatever you want.
There's so many of them.
Yeah, if you're good with Excel, just start there. Yeah. But yeah, it all comes down to journaling and knowing more about yourself and your personality, like you said, and then getting that strategy.
No, and I think we actually talked about this on last week's episode. You guys were asking, like, different ways to, find what works for you. And I will never underemphasize how important journaling is. Like, don't get me wrong, it's super important to know the statistics of your actual strategy and whatnot, but it's even more important to know how you trade it.
And right? How you feel during that trade, too.
Right, how you feel. Are you uncomfortable? Because if you're uncomfortable in a profitable strategy, you probably have too much size, right?
Exactly.
Like, there are so many things that you're probably not thinking about mid-trade that you can then reflect on afterwards and fix it from there. When I started, I don't know, I want to ask about your journaling experience, because I think it's super cool that someone else is pretty big on it. But when I started really taking that seriously and journaling every detail of every trade, which was time-consuming, like you said, time off, time away, or after market closes, right? Like, I was spending like 2 or 3 hours a day journaling, reflecting my thoughts, and like, it was parabolic from there. I kind of want to hear your.
Yeah. That's exactly like when I started to see the losses kind of like fading off. You know, if you think about a stock chart that's like reversing, that's how the P&L was for me. It was like down, 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 and then kind of like sideways. I'm like a break-even trader now, and then you hit that inflection spot. It's like, oh shit, like now we're breaking out and like making money, right? So it's like slowly creeping back up, and I was like. Then it just got a lot faster. So that period of like going sideways was that journaling phase, and kind of understanding, okay, let me cut out this strategy. It's not working. Losses, cap my losses.
Well, you're instantly going to increase your win rate.
Right. I'm taking out strategies that don't work. It's so simplistic, right? It's like, but you're never gonna get to that unless you start journaling. You know, it's like, oh, I never understood why, you know, I'm losing money until like I'm doing that analysis. So.
Well, no, and it's, you know, you just said another thing that resonates so well with me. It's trading is hard, but it's also simple, right?
Yeah.
And it's a lot of times it's hard because we make it hard. We overcomplicate it, and realistically, we don't put in the work to make it simple.
Yeah.
It's very, yeah.
And I mean, I can share a trade idea with you guys. I don't remember what the ticker was, but I had so much size in that trade. I can't remember what that trade was.
No worries.
But, and I was so confident in the trade, but I fumbled the trade because I had so much size in it, you know? And I was like, man, it did exactly what I thought it was going to be, like what it was going to do, but I just fumbled the trade because I put too much size in it. I was like, God damn it, like I should have nailed this trade, should have been my #1 trade ever, but I just fumbled it because I had too much size, you know? It's like...
No, oh my God, that same thing happened to me. This was a really, really toxic state, but I'd come off of a really hot summer, June, July, and then the beginning of August was so hot, and I just, one of my biggest trades have actually been small cap swings that I built into over a period, and the day of that breakout, add in, you know, true full size. And you know, it was coming off of the secondary COVID run where we're getting like AHPI pushing back up, and there was a stock VRPX that I had been stalking. I loved this daily chart, and I was on a vacation actually right before I went to Aruba, and I saw this chart setting up at lows, and I just thought to myself, like, this is the one. And so, you know, all of a sudden I found myself, I think it was trading at like $5 a share. And I was like, this is going to be my first $100,000 trade. The most toxic thing you can do, by the way, as a trader. And so I was like, all right, I'm loading in 25,000 shares. I'm just going to keep building in 5,000 a day. And my risk is going to be, I had like a 450 average. So like I'm going to risk right around $10,000 on this trade. And my risk is going to be $4. And the day I cut, it got down to like 410. It had been basing up at like, you know, 440, 450. It would pop up to like 520. So I was up more than I was comfortable with, but I was like, I'm not selling this. And then the day I sold it, dumped down to I think 408, right above 4. And I was like, well, I don't want to get caught with all this size and get massive slippage. I'm cutting. The next day it gapped up to 9, and then that was one of the ones that ran to like 30 something. You know, I even had that trade plan like worked out. I would have been all out in pre-market. You know, but still, it was that sense that I was way too big. My thesis, the thesis was correct, but I was oversized, and that makes you emotional, right?
Yeah.
Like, it makes you emotional.
So this is what I would say is a lot of people, like I said earlier, are focused on making money when they start trading.
Yep.
Which is completely the wrong mindset. Let the process work of learning how to trade, and then the money will come.
Yeah.
You know, if you force it, it's not going to work. You're trying to force making more money. Like another time, I was. This is the complete opposite of what I just told you. I was trying to level up my size, and I don't know, something happened in my brain where I was like, I'm going to double my size on this trade. You know, it was, for me, like a 5-star setup.
Yeah.
And so I'm like, all right, I'm going to have conviction. So I had my scales, you know, whatever. Here I'm going to buy, whatever, and here's my stop limit. It gapped up like $1 over, you know, my entries, and I'm like, all right, whatever. I'm still confident, you know, whatever. My size should have been lower at that point, right? Because it's gapping over my entry points. But, you know, I still went in with double the size that I was, you know, my normal size, because I'm like, I'm ready to level up. And then, you know, it went through my stop, and then I doubled down, which I never do. It's like breaking trade rules. I'm like, I'm so confident. But at the same time, it went through my stop. It's like, what?
It broke your thesis,
broke
right?
my thesis. Why am I still in the trade? It's like, oh, I'm leveling up. I'm so adamant. But no, I wasn't ready for that, because, like, you know, it's just something happens in the brain, and it's like, so I ended up losing a ton of money on that trade because I broke all my trading rules. And I'm like, I look back and I'm like, wow. Everything in trading is 20/20 in hindsight.
Yep.
You know, it's just, I looked at that, I'm like, wow, I'm embarrassed, you know? Like, I broke every single rule. I've been consistently profitable for like however long, and like it just crumbled under this like one, you know, lapse of judgment, right? So.
Well, and this is always the way, right? I look at those in the moment. It's probably one of the most painful things. Like you contemplate, like, should I even be trading anymore? Like, what am I doing? But then you give it a week, 2 weeks, and it ends up being one of probably, you know, unfortunately, you have to kind of take losses that are bigger than what you planned on, because it makes you better. You
Yeah.
probably, I'm sure you rewrote rules after that, or at least like really reinstated rules.
Just
and sizing
reinstated,
rules.
yeah, for sure. I mean, like you said, it's like you look at the loss number in your P&L, and first of all, you should really never look at your P&L and trade your P&L. You should trade your plan, and you should size according to your plan, and then the P&L will work itself out. So I looked at my P&L, I'm like, wow, that's big, bigger than it usually is. So I'm like, all right, let's double down. That was like the thing going in my head. I'm like, oh man, looking back, why'd I do that? Like I would never have done that otherwise. Like my plan went out the window, but I screwed it up, it didn't work out, and I should have just cut the trade, but it could have reset itself, and the thesis would have come back, but it wasn't in that position, but broke all my rules, and
When was this?
This wasn't exceptionally long ago.
Yeah.
This was like Q3 or 4 last year.
Yeah, okay.
It was one of the memer trades. Like I think it was AMC breakout, and that's the other thing. It's like I trade GME was my number one gainer of 2021.
Yeah.
P&L wise, in dollar amounts, and I was like, oh, I know how these memers move. It's like, well, it didn't do what I thought it was gonna do, and I paid the price because I stayed wrong. It's okay to be wrong. Nothing wrong with being wrong.
It's I'm wrong more than I'm right.
Yeah.
And it's about when you're right, knowing how to capitalize on that.
Exactly. Your winners pay for your losers, but you can't stay wrong,
Yeah.
So that's another thing for newer traders, manage your risk and make sure you don't stay wrong even after. Hope is not a strategy, right? You can't be in a trade hoping for it to bounce over your stop again or whatever, right? So you need to have emotionless, black and white decision making when you're trading, and it all comes through experience, I would say.
No, I absolutely love that. And I kind of want to ask now, I kind of want to bring it back a little bit more to the, this is all stuff you were going through while working. Does that make the emotion side harder? Or does it make it easier knowing you still have money coming in regardless? I'd love to hear that aspect of it.
Having obviously cash flow, is great. Cash coming in from my day job is definitely what kept me trading because I was losing money and then replenishing my account, I would say it definitely helps from that point of view. But then it got to a point where I'm like, I'm not putting any more money into my account. And I'm like, all right, this is all the money I'm going to put in and that's it. And so it kind of was like this is all you have, make use of it moment for me. And I was like, I need to learn, otherwise reevaluate, right? So it got to that point and I was like, I need to do this. And so because I looked at the number of my credit card bills and I was like, really I need to be more responsible here. So obviously put in the hard work and everything and it worked out, but that's why I say don't do what I did, obviously. Not financial advice.
Right, no.
But yeah, I mean, it definitely helped. I can't say it didn't help,
And so that's, building off of that, I know a lot of traders that are just getting profitable, just getting consistent, whatever the case may be, that are working. A lot of them want to, quit that full-time job. What are your thoughts on that?
Of course. I mean, here's the thing. It's like once you take that cash flow away, are you going to take the same risk as you normally would?
Mm-hmm.
If you don't have that money coming in, if you're trading for a living, are you going to have that money coming in to support your same risk tolerance that you have gotten successful at trading today? Because something I'm sure changes once you go full-time trading, psychology-wise. That's like, I'm trading for a living to put food on my table, to pay my rent,
Yeah.
So if you're using trading as like a supplemental income, that's a bit different, I would say, than, trading for a living. Just in terms of the psychology. But if you get your trading down to a system where it's just black and white, then I don't see why not, after you're making a certain amount of money and you're consistently doing it. I think that's when you're ready to make the leap.
No, I love that answer. That's a really, really fantastic. Again, I can't, I do work here at StocksTrade, but I'm trading most of the day, and it's trading related stuff, so it's all very, easy to work around. But I would love to kind of hear now, and we'll get into some charts at the end here, but to wrap up this portion of it, if you had to do this all over again, right? If you had to, you're brand new today.
Yeah.
Knowing the lessons you learned, what would you do different? Would you do anything different?
I kind of wrote some things down on tips for newer traders, so that's kind of what I'll go through.
Let's hear it.
So like I said, I would stick to that process, the process over profits. Keep saying that in your head. You know, that's what it is. It's the process of learning. You go to school, you get an engineering degree. It takes you 4 years to get that bachelor's of science of engineering, whatever, right? So why do you think you'll become a profitable trader in, you know? Yeah, it takes time. You have to learn. You gotta pay your dues. So what I would say is watch every tick, understand your strengths, and filter out those weaknesses after you put in the time and understand. But yeah, like I said, paper trading's good. Try that out for, I would say, a limited amount of time, and then add some skin in the game. Put some size behind your trades, like, you know, money, I mean. And then one of my tips is set up a trade formula and determine the strength of the trade that you're about to take, right? Have like a score sheet or a rubric that you like physically have when you're starting out trading. I do this all like more so mentally now. And it can be like, you know, this chart pattern is like one of my stronger patterns, so plus 1 point. You know,
like
this is like, you know, volume is really good, plus 1 point. You know, this is bouncing off the 50-day, you know, plus 1 point. Fundamentals are driving this as well. You know, that always helps, plus 1 point. Whatever it may be, make a rubric for yourself based off of how you trade well. Like, first of all, understand how you trade well, then make the rubric, and then every trade you take, score that trade before you take it, and that'll determine, okay, if this is a 5 out of 5, then I'll take 5 out of 5 size, you know, based off of my risk level. If it's, like, you know, $10 above, like, your supposed entry level that you had planned for, then obviously you can't take the same risk. So, like, ask these questions to yourself. A lot of traders don't really size every trade like properly. So develop that trade rubric. It'll determine the size and strength of your trade, and then actually do the charting on like your charts, your charting platform. You know, I said TradingView is what I use, but you can use Thinkorswim, you can use whatever, you know, there's a zillion other charting platforms, right? Mm-hmm. So do the charting, set your levels, you know, have a game plan. Put that game plan in, like, I used OneNote when I started out, like the Microsoft OneNote.
Oh, yeah.
It's what I use for journaling. So, like, write out the trade plan. You know, my stop is XYZ. My profit target is this. I'll start scaling out 25% here. And then, you know, everything will fall into place as that happens. And then if you do that trade plan before the trade, then you can go back and update that when you're journaling, right? So you can say, hey, this didn't work out. Oh, this loss was too big for me. Like, I should move my stop up or take less size, right?
Yeah.
So that's all part of the journaling process because you're putting in the trade plan and then revisiting it and reviewing it.
I love that.
Yeah, and so a lot of this I've said already.
Guys, while Ron's going through this too, if you have any questions for him, drop them in the YouTube chat. We'll try to get to a couple of them at the end here, but drop that right in the live chat if you're watching.
Yeah, and another tip I have is, like you said, I'm going to make $100,000 on this trade. You can't think like that. You got to think, I'm going to lose $1,000 on this trade because that's your stop.
Yeah.
Right?
Yep.
You size to your stop, not based off of your reward, right?
Mm-hmm.
Obviously, the risk to reward is what determines the trade. So, but that real driver is the risk.
Yep.
So you can't be going in a trade thinking I'm going to make $100,000. You have to say, and you have to be willing to lose money, right?
Yeah.
You have to be willing to see your thesis out, because if you're not, like, if you take too much size, you're going to stop yourself out too early, you know, so on and so forth, right? So as you take the trade, you should realize in your head that money is gone, you know, that to your risk, right?
Yep.
Immediately just think it's not there anymore in your account. And if you kind of accept that losses are a part of this, then you will trade so much better because losses are a part of the game. A lot of profitable traders lose more than they, you know, their percentage-wise, they lose more than they win, you know?
Some of the best traders have like a 30% win rate.
Exactly, but they're just in those big breakout trades that pay for all their losers tenfold.
Yeah.
So you have to be okay with losers psychologically, and you can't let that, like, deter you. You can't let that, you know, it's part of the process. So that's the thing. You will lose, and you have to accept that. If you're not a good loser, you're not a good trader. Like, plain and simple.
Yep.
It's such a funny way to think about it, but that's really what it is, you know?
I love that.
Yeah, and here's another thing, dial in. So like I said, you get your strengths, get your niche, focus in on that, dial in and get really, really good at that, and then just eliminate everything else. Because you don't need to be a jack of all trades. You know, if you're good at everything, you're not really the best at one thing, you know? It's like, all right, I'm a mediocre trader at that point, right?
Right.
I'm making good money and I'm losing good money, right? It's like, just make really good money in one strategy, and that takes time. Don't rush it, like do the journaling process and things will fall into place, That'll go into my next point about controlling your emotions, comes from all those other things that I talked about, journaling, size control, and everything. And don't be in a rush to make money. Focus on the process of learning, and the money will fall into place. And the last tip I have is don't just have trading rules, stick to them. Mm-hmm. So a lot of people are like, oh, I have this rule, like, XYZ. But then they're like, oh, I broke my rule today. It's like, well, what's the point of having the rule if you're going to break your rule, right? It happens.
I have a question about that, and this is definitely this is a really tough one to answer. But there are times where it's acceptable to break a rule. Now, very, very few and far between, right? Yeah. You have those set for a reason. Do you have that same mindset, or is that just me?
I would say if you're gonna break a rule, it's got to be an exception with the caveat that maybe you reduce size. Yeah. It's like, okay, it's through my stop, and like I think it might bounce like $1 lower. So like maybe you'll take off half your size or something, right? I mean, I'm not gonna be like, all right, broke my rule, like full size, YOLO. Like there has to be like I'm sacrificing something here to like kind of move forward with the trade thesis. Maybe like, oh, like there's news out or something, and like it's moving extra more volatility than normal. So like I'll give it like a little bit more room, like just. But it's rare that I break rules now,
Yeah.
If I do, I'm going to reduce my size decently, at least half or whatever, right?
No, and that's one of the only times I break my rules. If I start off, or break a rule, is if I start off in a trade where I know I'm undersized with a plan to add.
Yeah.
Ideally, I essentially will, if I really am strongly convicted on the chart, let's say there's a risk level above low a day where it might be like a quarter size loss, I'll still size in with low a day. If I want to give it more time to set a new low, I'll have my full size loss on low a day, but ideally being able to add into that current the risk level I'm liking. But very few and far between these days that I go out of my way to break a rule.
Absolutely.
You can't.
Yeah, trading rules are there for a reason. They're not meant to be broken. So
actually, to that too then, how did you create, were your trading rules all created through journaling?
Yeah, it's all through the process of journaling, learning about yourself. My rules are going to be different than your rules, right? Because we're different people. We have different emotions and psychology when we're trading.
Yep.
So it's all a process of kind of learning about yourself. Psychology is the biggest thing in trading. Like I said, the charts are only, say, 25% of it. 75% is psychology, probably even more.
Yeah. Learning how to deal with yourself.
Yeah, because when you think about it, price action is just psychology on a piece of paper.
Yep.
It's buyers and sellers, how they feel about the stock, buying and selling it, visualized on a piece of paper. So,
well, now that we're kind of speaking on charts, and we're getting close to the end here, I'd love to kind of, again, you're more focused on larger cap stocks. On really, I'm sure the overall market condition has to do a lot with.
Oh, for sure.
Does it have to do with like the way you size into a trade, the overall market condition?
100%. So one of the things on my rubric, right, that I think about is the market in a trend? Is it an uptrend and I'm going long, or is it in a downtrend and I'm trying to go long against the trend? Am I counter trading, or am I going with the trend? Obviously, I'm a trend trader, so I'm a trend and pivot trader. It's got to be like a strong pivot if I'm going to take a pivot trade.
Yeah.
But like, for example, one of the trades that I was in less than a month ago, whenever we made that bottom, after the Russia-Ukraine news, I was watching this SPY downtrend from highs. It's clearly accepting this trend line, right, from highs. So I was like salivating at like this downtrend snap. And man, one of my best trades this year. Yeah, I think maybe the best trade I've made this year.
Good stuff.
It was first that washout long and then break of that trend snap.
Yeah.
So the first one was the washout long, as a pivot off of that low.
I almost know. I think I know exactly which day you're talking about too. Yeah.
And then the next one was that break of that downtrend line. So trend lines are one of my bread and butter.
Yeah.
It's such a simple thing, and just use it. It's a trend line. A lot of, everything follows a trend at some point in its lifetime in stocks, right? So anyway, so it broke that downtrend, and my target was 447 on SPY. Obviously, SPY ripped to like 460.
Right.
So I'm like scratching my head. I'm like, holy shit, I minimized the shit out of this trade. But yeah, one of my best trades of the year. I was like patient for my setup. You know, I wasn't really trading much. I was taking scalps here and there, you know. I'm not making a lot of money doing scalping and all that.
Yep.
It's like, have your big trade ideas that you're good at pay for everything else. Like, you might not be trading a day, you know? It's like, I don't need to be trading every day, right?
Well, and that's one thing. So they do, Matt, who taught you to trade, that's one of the big things he focuses on is, right,
absolutely,
really being patient for your A+. Like, what's the point of wasting
exactly.
mental capital, actual capital, if it's not an A+ setup? And that's, I mean, that's something I guess really every great trader always mentions, right?
Yeah.
Is why
patience.
Patience. Wait for that A+ setup.
Yeah.
Right.
So, I mean, I was still trading, like, decently, like, here and there, scalping. I like to trade, you know, it's fun. You know, I like to scalp, whatever. I enjoy it. Some people are like, it's not worth my time. You know, I'd rather not make $1,000 today, and I'll just stick on, you know, that one trade that makes me $50,000.
Right.
So, I mean, whatever your style is, like, figure that out. So I mean, I was scalping a little bit, but not like, I'm not taking big day trades, you know, during market chop. You know, that's a great way to lose money.
Yeah.
I figured out that I'm not good at that, so I'll stick to, you know, sitting on my hands during those periods of market chop and wait for my setup patiently, right?
I love it.
Or I'll just trade extremely small size, you know, try out different strategies, you know, maybe something else. But, like, you know, I've gotten to the point where I'm not really doing that anymore. I'm kind of like, I've honed in on my niche, and like, this is my, you know, main money maker. So like that trade that I was talking about, that trend line snap,
it's bread and butter.
Yeah, bread and butter. So saw the volume come in, saw what it was doing. I was like, all right, I'm in. So that was one of my best actually swing trades.
Oh, nice.
Yeah, it was a huge day trade in the beginning, but yeah, obviously considering the market conditions, it's not something I sized overnight, you know, but it was something that I was day trading every single day, and you can look at the SPY chart. That thing is insane rip-off lows, right? But yeah, so my target was like that 50-day, 200-day confluence, which was like one of the key horizontal support and resistance levels, like 447, I think. And then it just kept ripping. I was like, oh, well, so I was kind of just watching. I was like, well, surely, like, I don't know how much longer this can keep going up. But then I kind of revisited that thesis, and then I looked at the chart, and I'm like, okay. So it kind of, like, started selling off here, so it'll probably go back here. So then I entered the trade again long, which, you know, there's so much noise on FinTwit.
Oh, there sure is.
And during these cycles of, like, bullish and bearish, like, sentiments, everyone is, like, screaming, like, you know, oh, everyone's going to get screwed, like, long or short, you know.
Meanwhile,
like,
the SPY is, like, at all times.
Yeah,
not at,
ripping.
but ripping people's faces
and
off.
people love to, like, have their own sentiments and, like, be super vocal about it. And then, like, it's like...
And those are the people that didn't even have a position.
Yeah.
Right?
It's like, okay, like, fine, like, you can have opinions, but, like, what... I don't know. I think it's pathetic at times. A lot of noise. So that's another thing I would say is focus on the trade setup and, like, what it is, and don't kind of tune out FinTwit, you know?
Yeah. My worst times as a trader is when I am overly looking on Twitter and seeing everyone posting ideas that, like, oh, well, this looks good, but that is not. Like, because that's one thing I'm sure, like, it's almost a little bit of a mental battle is you have a strategy, you have a very consistent strategy, but you still understand other strategies and when they look good, other setups and when they look good, but it's not something you're comfortable with. And that right there, I'll see these charts, people posting these charts, and I'm like, that looks like a really good chart, but and you know, you don't know how to trade it appropriately.
Yeah, and I mean, maybe you have a certain thesis and conviction, and you go on FinTwit and you change your mind, and then next thing you know, it's like, oh, I should have been in that trade.
Yep.
You know, it's like, don't let someone else's opinion mess with your conviction. You know, you worked hard to get that conviction and, like, build that trade thesis.
Yep.
Like, see that out. That's the other thing. Once you start getting consistently profitable, you have conviction in trades. Every trade isn't going to be 5 out of 5, you know?
No, yeah.
So once you get that experience, you got to listen to yourself and, like, trust yourself, get that confidence, because confidence takes you to the next level.
It sure does.
Because that gets you, that switches something in your, you know, psychology when you're more confident, right?
And going back, right, to, like, when I said I was coming off a hot summer, and that's a thing that I've learned too, is a lot of times comes in cycles, right? It comes in, I was extremely confident, overconfident, and then that actually brought me back down. It leveled me out a bit, and then I had to build that back up. It's a big part of trading is, like, again, we talk about it so much, but dealing with your psychology, and it's going to come in waves. Like, that's just part of the game, and your goal should be to obviously be as emotional. I hate when people say like be an emotionless trader, but understand your emotions and know how to control them, so you're not going through massive cycles, right? You want it to be a bit more a bit more tight, I guess, in terms of the cycles. But
absolutely.
Sorry to cut you off there.
No, I mean, you got to understand your emotions even when you're trading. I mean, I haven't really had the experience of like having like traumatic life experiences like, you know, in my trading career, but like, you know, if you had something like that, like maybe don't trade that day, you know, like know yourself, like know what's going on, you know, have some cognizance of like your emotional well-being and stuff like that, you know, it goes a long way. But yeah, getting back to SPY.
Yeah, let's pull up the chart.
Yeah, let's pull up the
this
chart.
up. I'm going to switch this over. Oh, hey, can we ask a quick question? There's a kind of good one before we get into SPY.
Sure.
Inspire Success wants to know, are there any strategies that you still use today that haven't changed much over time or have only slightly changed? Or are you noticing like strategies that, you know, increase and decrease in effectiveness? I know we kind of went over that with the changing of the overall market, but
so I would say it kind of goes back to trend trading versus counter trend trading. Certain strategies, you know, if you're bullish the market and bullish on a certain stock, and if it's a bullish trend, you know, you kind of like will size more as things are like bullish on all time frames.
Right.
You know, like if it's bullish on the 1 minute, 5 minute, 10 minute, 1 hour, on the daily, on the weekly, you know, then everything's lining up, and that's like, you know, kind of an ingredient for a 5-star setup for me.
Yeah.
So yeah, I would say there's times when certain trades don't work or don't work as well, but I would say I stick to the trades where I know they're going to work in the environment that I'm successful in implementing them, right? So like, for example, like I was telling you about that trend line, you know, that's all the ingredients were there for that to kind of work out.
And I'm assuming, since we're on here now, I'm assuming this is that trend line we're looking at right here.
Yeah, even from all-time highs. I guess, are the guys seeing this on
Yep.
Okay.
Andrew, they're seeing the chart up here, right? They're seeing the chart up? Perfect. All right.
Cool.
So here we go.
Yeah, so we had one punk right there, maybe those two, those punk candles, yeah.
If you want to draw the trend line, you're not going to move it too far here.
Yeah, no worries. So I just click and snap.
Yep, click and hold. Click and hold.
Click and hold. All right, my bad.
No, you're good.
Can I move this?
No, here. It's tough on the Mac. Here, there you go. So yeah, just.
But yeah, I mean, you can kind of see it as well, right? So it's like right there, basically here, something like that. So I mean, this was the trade I've been eyeing, right? And then you can see that breakout, right? And so my target was this confluence of like the 50 and the 200-day moving averages. At the time, it was right here, right?
Yeah, at 442.
Yeah, so I was like, okay, it's going to break this downtrend and then go to these moving averages. And then you can see it strong horizontal support and resistance here, right?
Yep.
So it got to this level, and then it kept ripping. And I'm like, all right, let me revisit this trade thesis. So I went long again with so you can kind of see the accelerated selling happened here, which is strong support and resistance as well. So that was my next target, and I mean, pretty much exactly where we slowed down, right?
Yeah.
It's that 458 level. So
here, right now it's on a horizontal, just a horizontal.
Yeah, and you can see we struggled to kind of get over this level here as well. So we puked up both of these levels. Like you can see the accelerated selling after this. So I mean, it's just understanding the levels and what they mean from a psychological basis, right?
Right.
So that's the other thing. It's like you can understand technical analysis and price action, but like what does it mean in terms of like the sentiment of the market, right?
Yeah.
So when I see a level is immediately getting puked, that means like once we overcome that level, or like, you know, price action is going to want to like magnetize to that level, right?
Yeah.
But when we overcome that level, it's going to be a strong
support level.
Yeah, strong reaction, or whatever, right?
Or, yeah.
It depends if it breaks it or it rejects it, right?
Right.
Either way, it's going to be strong. So strong levels are strong because sentiment in the market tells you that, you know, there's going to be a strong reaction from buyers and sellers at that level. So it's like kind of understanding what these candles mean, and like, is it a big candle off that level? You know, this is everything that I'm thinking about when I'm looking at the levels in the chart, right? So
no, absolutely. Now I'm curious, Ron. I know you said you had a really nice trade on LAC. how did the overall market, and I know this is probably a little bit based on sector as well, but I'd love to kind of hear just like your thought process on this.
So like, I mean, same thing, right? You can see a distinct,
Let me make sure it's on. Here we go. All right, yeah, I'm just doing a click and drag.
Yeah, so like, I mean, distinct trend line.
Very beautiful trend line.
And this isn't rocket science, right?
No, it's not.
It's like you see that trend line, and this is one of my bread and butter setups. But it's like I have conviction in this because I know I've traded this a zillion times, and I understand my emotions when I'm trading it. I know how to trade it. I have a game plan, right? So I saw this, and this is actually stock I've been long in my IRA for a really long time. You can even make this, is this still on the trend line?
Yep.
Okay. You can even make this like, I don't know where it is. I think from here, you can make this into a pennant, whatever.
Yeah.
You can see it's kind of consolidating, it's like went up here and then rejected this level, right? Came back down under this level, this 36 point, whatever, like.
Almost create a little
right
head and
here,
shoulders
right?
there if you're looking at just the chart
Yeah.
pattern. Yeah.
So it tried to push through this level. Can we draw a horizontal line there?
Right here?
Just a little bit lower. Yeah, right there. So it tried to get over this level once, failed, right? And then broke through all-time highs, but got rejected again, and then ripped once, but then quickly got rejected again, right? So it has trouble getting over this level. You can see that on the chart.
Oh, look at that volume coming through it now, huh?
Right.
Yeah.
And then look, and then it contracted. It like reset itself up, right? So it's got this downtrend, and you can see it's contracting, right? It's much larger price action range here, and then it's contracting, coming down in this downtrend, and now it's tight here, right?
Yeah.
And look at this. This is the 50-day, right?
Yeah.
The 50 days right here. This is the 200-day. Bounced off the 200-day, so that's a strong sign. And it overcame this 50-day after being rejected at the 50-day multiple times, at this downtrend, and then broke through. First of all, it broke through at the 50-day and this downtrend line.
Yeah.
And then what happened? The volume came in, right?
Beautiful.
So the volume came in on this level that it couldn't get over and sustain over, right? So what is that? That's super bullish. So
super bullish.
So a trade idea that I'm actually looking for and stalking over the next couple of days is this volume is so unbelievably notable. It's just
night
worth
and day,
watching, right?
yeah.
So if we can base above this, whatever, let's just call it 36, this price level at 36, just some sideways here. I don't know how long we're gonna take to like really base out because the stock is really strong. I mean, with SPY even like red, what is it, 2 days now?
Yeah, it's still pushing.
Still pretty much at all-time highs, right?
Yeah.
So if it spends some time here basing, like one of my bread and butter candles is the inside day candle, which is what it is here, right?
Yeah.
Inside day means that the price action of this day is completely within the price action of this high and this high the previous day.
Yep.
So if we can put in maybe one more inside day, I'm loading some decent size with risk to 36.
It's just that consolidation on a multi-day instead of like a multi-week or multi-month time frame. It's just a much shorter term consolidation. Yeah.
And so here's another thing. If you're newer to trading, these big levels on the daily chart, basically what happens is this technical analysis works on small time frames as well.
Yeah.
But what I do is I take these big time frames and I get day trade ideas from them and swing trade ideas from them. So the smaller the time frame, the shorter the trade duration is.
Yeah.
So if it's, based off of the daily or weekly chart, that trend, that resistance or that support is really strong on the daily or weekly, or that pattern is forming, the longer the breakout it's going to be, right?
Right.
So if you're eyeing this big picture setup on LAC, right? If it consolidates here, it might go on another rip like something like this, right? This is an all-time high break as well, right? At this moment in time, this was all-time highs. It consolidated here. It didn't consolidate for very long. This was kind of choppy. I would hate to be in this kind of breakout trade, but it ripped to, what is that, from 24 to 36? That's 12 points on a $24 stock.
Yeah, there's a 50% move for you.
Yeah.
Right.
So, I'm envisioning and kind of visualizing that it trades sideways here for a little bit. I could see this at, this is all-time highs, at least a test of all-time highs, 41, but, I could see this ripping to like 45. Who knows, even 50. It kind of depends on SPY as well.
Yeah.
If SPY is going to go back down to lows, which I don't think it's going to do. You want to pull up SPY real quick?
Yeah, let's bring it back up.
Just so I could put my thesis out there. We don't even have to zoom out. This is perfect.
All right.
So I mean, if SPY remains healthy, and so I think there's 2 levels to watch. There's 443 and 447, which so coincidentally happen to align with these 2 moving averages. They're not actually the levels because of the moving averages, but you can see they're levels I'm watching on the chart.
I guarantee people are going to ask, and I need moving averages, what do you do with them?
It's just the 50 and the 200-day. I just find repeatedly that when a price breaks through moving average, like the 50 or the 200-day, and it aligns with a horizontal level, it's magic. Something happens. And so when it like overcomes a key resistance level, and the 50-day, it's overcoming that too, it's at the same level, something crazy happens. And it serves as like a launch pad, whether it's a downtrend line or a horizontal resistance. If you have all those 3, like a downtrend line, a horizontal level, and the 50-day, or the 200-day and the 50-day together, I mean, that's like just creating more like fuel to the thesis, right?
Right.
So
more confirmation.
Right. And I don't use like crazy like amount of indicators. Like this is all I look at when I trade, the 50-day, the 200-day, and price action and volume, right? With my trend lines.
Right, exactly.
And familiar patterns, right? So what I look for, bulls need to defend 447 and 443, which is like right here in this zone. If we get under 443, I'm almost certain that we would go back down and retest. So a lot of my bread and butter setups are also retests.
Yeah.
So we broke this downtrend. We haven't really retested it. So if we break through this level here, like 439, I'm almost certain we're gonna go back and retest this, whatever, 425, 430, whatever it is, level 430, let's call it, which is the breakout spot of this downtrend, right?
Yep.
So we broke out from like 429, 430. Like that's where we will go if we fail through this 439 level. So 439, 447, like this is a super choppy range. So I'm kind of like pumping the brakes at the moment. LAC is a stock I'm really bullish on. And you can see it's showing resilience versus SPY. It's still sitting at all-time highs. So I'm not going to put, A+ size on it just because the market is kind of like getting its footing and it's super choppy. But, this would be an A+ kind of setup for me if the market was in an uptrend and kind of like really constructive, right? But I know the market's not, so I'm not going to put the same amount of size, right?
No, we were talking about that earlier.
Exactly.
Right? Are you good with the charts?
Yeah,
cool.
I mean, this is, for sure.
Switch this back.
If anyone has any questions on those technicals, like feel free to ask.
They're loving the way you keep it simple. You don't need to
keep it simple, stupid, man. It's not rocket science. Like
trading's
I said,
hard, but it's simple.
It's all in your head, man.
I couldn't agree more. All right. Well, one other question, I guess that you got a couple of them. Any way to suggest, like learning more about trend lines, or was this mainly
trend lines is just drawing them, man.
I know.
It's just the more times it touches, the lines, the more times it's, valid, right? So you're gonna have the pukes of the trend lines, and like, maybe it crashes through and like fails. Then that's actually an indicator that the trend line's really strong.
Yeah.
If it like has a false breakout, and then breakdowns are always really harsh. So.
That's another one of my. That's one time I'm allowed to cut a loss early before a loss, right?
Yeah.
That's a time I'm allowed to break a rule. Is like a break through a trend line and just snap back. With that again, that's kind of normally a
rejection.
It's a rejection. It's a failed breakout, I guess you almost call it. But everyone's just loving how you're keeping it simple. Overcomplicating. So
I love that, man.
Ron, we're gonna finish up here. We have your Twitter is.
It's Burgundy with 4 R's.
We put it right here in chat, guys. It
awesome.
will also be in the. It's also gonna be in the description. Do you have any other socials that like? Or mainly
no, it's
Twitter?
just my Twitter, man. I'm Ron Burgundy on Twitter, and come find me, interact with me. I respond to a lot of questions on there. Feel free to ask me stuff. I love, so one of the things when I was starting out was there was a guy on FinTwit that I was like asking a lot of questions. And he would respond to a lot of them, like a pretty well-followed guy. So I really respected that. So I kind of want to give back to the community and like give back the education, because I want people to know how to do this. And it's really hard. Learning how to trade is the hardest thing I've done in my life, harder than the engineering degree I got.
Which probably wasn't an easy
No.
thing to get.
Yeah, so I mean, I love to give back. I love to interact with people, so feel free to hit me up on there and shoot me a message if this was helpful, or if you have more questions, just let me know.
That's awesome. And everyone here as we're wrapping it up is saying they love this, so that's really fantastic. Is there anything else you wanna tell them? Do you have any closing thoughts, things that you want to get out?
I would just say keep working at it. Build that conviction in your strategy and your setups, and stick to it. Build that consistency and get that strategy. I would say just stick to it, man.
I love it, man. All right, well, guys, we're about to wrap this up here. Like I said, Ron, for those of you who are watching live, we have Ron's Twitter posted right in the chat. We're gonna have it posted down in the description below. Ron's seriously, I love this guy. He's just a fantastic guy, great friend, great trader, and I was super stoked when he came on. So if you guys do have any questions for him, that Twitter is right there. Ron, thank you again for coming and joining me.
Thank you, Bryce. I appreciate you having me on here.
All right, guys, that's going to do it for today's Tuohey Talk Show. If you haven't already, make sure you like that. Well, yeah, definitely like it, and subscribe so you can see these episodes that come out every Friday. And hopefully we can get another fantastic guest on next week. Ron, I'd actually love to have you back on sometime in the near future.
Hell yeah.